Welcome to SoFi Wednesday. Today we're going to talk about the daily chart and the weekly chart. For SoFi, we're going to look at the long dated and short dated options on this one. We'll talk a little bit about my price targets, my ads and trims, what I'm going to do long term with it. And also we'll touch on a little bit of SoFi news that's out recently and a quick look at the general market overview. So that'll be the economic data yesterday and what's coming out today. Right, let's just jump straight in, shall we? First off, I'm not in my pajamas today, so that's exciting. Something a little bit different. I mean, I just chucked on a hoodie, so I wouldn't get too excited about it. But price action. So we do have this really nice pattern here, the blue line. We did break out that initially. We had a decent back test. We dropped a little bit under it, but we had a lot of confluence here. We've got that peak volume shelf. We've got the bull market band with that historical low there. Love it. Lots of strength there. It was fairly sure to get a bounce there, so we've been adding to my position. We also have a little bit of confluence with this. It's a bit of a wishy-washy head and shoulders. The measured move of it I put in the green there, so we have both the blue and the green measured moves kind of lining up with that kind of $10 range, which is a great psychological level. So I think when we do push past, we're going to get that one quite quick. Now we have the Fed meeting today, so depending on how that goes is going to affect the entire market. I don't necessarily think it's going to be about if we get a 25 or a 50 bips cut. I think it's going to be what JP says. If he's sounding hawkish and worried, then we're going down. But if he's confident, the economy is good, job numbers good, they're going to succeed in their dual mandate, then I think we'll see some upside. And SoFi is one of the companies that is going to be doing very well in that situation. So if it's good, a lot of the rate sensitive stocks should pop. So kind of financials, big ticket items, that kind of thing, Tesla. But other than that, though, looking at this, RSI still got some space, so if we could have a little pop, that'd be nice. We did have this pop above the kind of head and shoulders neckline. Again, it's a bit of a wishy-washy pattern. Honestly, I would prefer for a push over this Fibonacci level here and then to turn that into support. But if we're going to use this as support or one of these historical highs, that's fairly decent. Just anything to get out and stay out of this kind of consolidation range here. MACDX Plus, we're kind of diverging again with the moving averages, which is excellent. We want to see that. Institutions have been coming in very strong. They've really driven this one. And flow's kind of low actually, but still good. I'm happy. I'm very happy with SoFi this week. It's been an excellent move from the bottom. If we just take a look from where that wick was to where price is today, that's just under 17% move. That's quite a large move for SoFi. And again, what happens next is going to depend massively on today's FOMC meeting. I think a lot of stocks will fade through the day into the meeting. We'll get some de-risking. A lot of that's most likely going to be in tech. And I guess we could technically class SoFi a little bit tech with its Galileo stuff and all that. But for the most part, it's going to trade with the financials today, I think. So for my trimming and adding and my fair value is still $14 on that one. So nothing's really changed on there. The underlying fundamentals are sound. If anything, I'm getting more bullish. All of the interviews Noto's been doing are killer. I'm loving it. But mainly I want to point out that if SoFi is going to push to that kind of fair value, it's going to be a 70% plus move. So that's going to make the position way too large. So I'm going to have to trim that. So I'll stick with my normal process of trimming any outsized, unusual daily moves on that one. So other than that, though, there's a couple of areas on my chart marked in yellow. And there'll be kind of areas that I will take profit on. Just small bits, just to make sure I'm not getting too overweight. The largest kind of trim I'll probably have is the golden Fibonacci level. Price loves to kind of bounce back from that level. Normally, that doesn't always have to happen. So the two kind of areas for trimming we've got picked out are just over $10, where the measured moves for those two patterns we talked about earlier is. So that's going to be, I think, quite a nice little chunk of change I take off there. And then above that, we've got the 1157 kind of area. That's a historical high, that one. But slightly below that one, we do have the golden Fibonacci level. So I'll probably take more off there and only a slight trim on the one above that. And then the next one will probably be the kind of $14 area. That does also line up with the capped call limit. There's a post on my website about that at thecraftytrader.com. We talked more about the senior notes offering, and that's all discussed in there. I don't want to keep going over that because it's getting a bit tedious. But other than that, though, I think that's it. If we have a substantial pullback at those levels after I've taken profits, that's what I like to scale back into. So if we did have a pullback from the fib level back down to that yellow support line, I would probably buy more of that, because that would be about an 8% pullback. So I wouldn't mind getting a little bit more extra on that. So looking at the weekly chart, it's a little bit easier to see the levels I was talking about, the two yellow lines there and the orange one. They're the kind of targets I'm looking at. So quite a substantial move. But the RSI's got plenty of upside space on the weekly. And we do have this kind of fresh golden cross still diverging a little bit there and pushing retail out and institutions kind of dominating. Flow is looking a lot better on the weekly chart. So sorry, I've got a tickly throat today. I feel like something's always wrong with me lately. But yeah, I'm pretty confident this measured move will complete. We have multiple occasions historically of SoFi filling these ones. So we got the purple one there, the orange one, and then another purple one, and then the blue one we're currently working with. So SoFi does have a lot of good history filling these patterns, and typically that's what you want to look for. It's not necessarily all stocks that like to fill in certain patterns, so you'll sometimes find stocks that don't really fill their gaps, but other stocks love filling them. So Tesla's a really good example of that for gap filling. If there's a gap, it's most likely going to fill. I think there's one really low one on there at the moment, which I don't think is going to fill, but typically speaking, it does like to fill its gap. And typically speaking, for SoFi, it does like to get its measured moves for these patterns. So looking at the open options interest for SoFi here, we've got this kind of $8 level that was going to provide very strong resistance for this week. Now we're halfway through the week, so, and we've popped above this and kind of we're back testing it. So it looks like possibly we're over the hump on this one, but we'll see. Like we've talked about earlier in the video, we've got the Fed meeting today, so a lot of this is going to depend on what happens with that. But below that, we do have this really nice $7 support. If we got back down there again, I think I'm going to have to go overweight in this one because the company's absolutely nailing it. And the week out after, again, we've got this $8 kind of resistance. We are over it currently. So I think we're either going to pop over or we're gonna sink back lower. But there's a lot of kind of support here. $7.50, $7 again. Oh, sorry, my dog's wanting to get on my lap. No, Lily, good girl. What was I talking about? The next week out, again $7. So a lot of people looking for this $7 kind of downside. So that's going to be very, very strong support if it's the same kind of area picked out over the weeks, and $8 resistance. So we're set up in the options market to kind of chop. Lily, no. And so we're either going to break or we're going to chop. So we'll see how that goes. But let's take a look out further. January 2025. Okay, we got a lot larger measured move here. So we are expecting to make quite a considerable leap at some point. So bear that in mind. January 2025 is not that far away, guys. So the high targets here move to $10 and $15. So that is amazing. That kind of lines up with what we're looking at. I'm looking at kind of $14 as fair value currently. So that kind of level is within the realms of possibility in that time frame, although it is quite a large move. Looking out the year after, though, January 2026. Let's just pull this down a bit. Okay, the level's kind of the same we're working with there, but I just want to point out that Noto has a very strong incentive to get to at least 2025 by 2026. He does have incentives to get higher, but if he can just make that first incentive, which I think is very likely to get to that level, then that's mega bullish, guys. So I have a couple of things I want to talk a little bit about SoFi. Mainly, I want to talk a bit about what's causing the price action to stay depressed. Other than that, though, I just want to. A lot of people have been asking me questions and pointing out things about SoFi, saying talking about certain metrics that they don't like within the company. And the pattern that I'm noticing is people are trying to value this as a value company. It's not a value company, it's a growing business and it's growing quickly. So talking about metrics for the business like it's barely making money, well, it's only just become profitable. You can't base its entire trajectory purely on those numbers. You've got to look forward with this one. So I just want to remind people to do that. But other than that, though, if we look at the Robinhood trends analysis here, a lot of retail are dumping this one, and that's probably because we're having this nice move up. So they're kind of just trimming or just getting rid of their position. They caught the trade that they wanted to, it's hesitated, so they're selling out. But I think that's a mistake. If we look at the chart below here, this is pulled from Fintel. This is a really good website to look at what institutions are buying. Institutions are really just coming back to this one quite aggressively, and I don't see this trend slowing down. I think as the quarters go through and we have more and more good earnings and they continue to execute and expand, I think the growth numbers are just going to continue to grow. That sounds weird. I think retail's making a mistake here. And it's a good thing, though, if you're a long-term investor. If we look at this chart in the middle, it shows us the ownership breakdown of its current kind of float there. So the institutions are in red and retail's in blue. Now, it's better to have more institutional holding than retail. So, I mean, retail's going to get washed out and they're going to be very remorseful, one of those. Other than that, though, what's keeping price down is short interest. I think it's currently sitting at something like 18 point something percent. Let me just check that one quickly. Don't want to give you the wrong numbers. I can access that. 18.7. That is very high. We had this little peak here in 2024. And if we line that up with the chart, price was higher and price did pull back there. But I don't know why there's so much short interest. We had a low of, what was the low on the chart? $6? I think it was $6. A $6 low recently. Are they really expecting price to get lower than that when the fair value is $14? It seems crazy to me that we didn't have we didn't see these short positions shrinking. They've just kind of held. So maybe they're pricing it as a value company. Who knows? So for yesterday's macro data, we've got the retail sales data. It was okay for the most part, a little bit of a mixed bag. So month over month on the face of it came in pretty good. Nothing to complain about there. But then if we took out autos and gas, we were down a little bit, but nothing too major. So pretty flat, really. Retail sales year over year also down a little bit, but nothing terrifying. Industrial and manufacturing, again, we talk about it all the time. It's good for it to be good, but it's not the be all and end all. It's going to be choppy and it's going to spend most of the time in kind of negative territory. Maybe if Trump becomes president and he's bringing a lot of businesses back to America, that might change, but that's not really something people are betting on right now. So other than that, today, before market open, we've got the mortgage data. Now, that's the mortgage rate has been coming down consistently for a while. It's not really driving too much of an increase in the mortgage applications. Now, this happens because when we start getting into this cycle of rates coming down, people will hold off purchasing because they'll almost have the expectation that in 6 months to a year, it's going to be much more affordable for them. And they're not wrong. That's correct. That does happen. So the mortgage refinance index might recover a little bit faster, though. People will refinancing is a bit different. When you've got to do it, you've got to do it. Sorry, frog in my throat. Building permits preliminary, that came in a little bit lower. We want to see more building permits, really. We want to see a lot more building. That's going to help with numbers a bit. Housing starts came in a little bit lower as well. Not ideal. Don't really pay too much attention to the oil data here. It's a bit convoluted, I find. The big topic today, though, is going to be the Fed interest rate decision. I've talked about it for the last few days. I don't think it's necessarily going to be too much about if it's going to be 25, if it's going to be 50. If it's another pause, though, the market will crap the bed. If it's 75, the market will crap the bed because they're just going to be so out of left field. But I think it's probably going to be a 25 based on kind of JP's stubbornness and we're waiting for the data kind of situation. But even if it is 50, I don't think it's too much. There's going to be an initial knee jerk, but I think most of the movie is going to come from kind of his sentiment around what the decision's been and kind of what they say about going forwards. If he's going to give the indication that there's going to have to be a lot more aggressive cuts and the timetable is going to be brought up, then I think the market will deteriorate. But if he sounds confident and it's going to be a slow and steady, and there might be some pauses while they wait for data, that's going to be super bullish. Typically, the markets do a lot better if it's slow and steady. If it's going to be fast and choppy, then it's not great. But not too much else interesting on that one. If you've got any questions, feel free to pop them below. If you have any requests, that kind of thing, just fire them off to me as well. Other than that, though, if you like this content, share it with your buddies and subscribe to my channel, and I'll see you tomorrow.